Hello guys, welcome to part 3 of True SMC from A to Z 2026 edition, and in today's video it's all about inducement. And so without further ado, let's dive in. Okay, so what is inducement? Inducement, abbreviated as IDM, is the liquidity resting above the high or below the low of the most recently formed valid pullback. The keyword here or the key phrase here is the most recently formed valid pullback. So if we get into this chart on the left, we can clearly see exactly right here that price took out the inducement. Of course, this one here becomes a swing point, and we can clearly see price reversed back and made a break past this swing point low. And we know that once such a pattern is formed, that qualifies a bearish break of structure. By now, I want to believe that you guys know how to identify break of structures, as we discussed on the previous part. So if I am to mark the swing points here, we can clearly see this one here, and of course another one exactly right there, or the external high exactly right there. So this means that we have acquired a trading range, of course ranging from that high all the way to this low currently. And we all know that the next step after identifying the trading range is usually marking the recently formed valid pullback high. Of course, since this here is a bearish scenario, and we can clearly see that this one here was the most recently formed valid pullback high, exactly right there. And in this case, this pullback, you can clearly see that this pullback was created before. Okay, so let me mark these. We can clearly see that this one here is our break of structure. So exactly right there, that's a valid break of structure. And we can clearly see where the recently formed valid pullback that was taken out to confirm this break of structure was exactly right there. So we can clearly see the break of structure is exactly right there. And we can clearly see that the recently formed valid pullback is exactly right there, and it was created before the break of structure. You can clearly see that our recently formed valid pullback was created before the break of structure. Okay, so back to the theory part. There are two types of inducement, that is major inducement and minor inducement. You can clearly see exactly right here that a major inducement occurs after a break of structure and a minor inducement occurs before the break of structure. And we can clearly see exactly right here that this one here was our recently formed valid pullback, and this here was the high, exactly right there. And we know that the inducement is the liquidity resting above the high. So exactly right here, the high of the most recently formed valid pullback. And this one here is our recently formed or our most recently formed valid pullback. And this here is the high. So the liquidity resting above this high, that liquidity resting above this high is what we call the inducement liquidity, or in short form, IDM. So in this case, since this inducement, or since this recently formed valid pullback is before the break of structure, in this case, this inducement liquidity is what we call the minor inducement, since it occurred before a break of structure. Okay, so in a trading range that has a minor inducement, just like in our trading range right here, we can clearly see the high, and exactly right here, this is the low. We can clearly see that our trading range has a minor inducement. That external high, that external liquidity resting above our external high, we can clearly see this one here is our external high. So that liquidity resting above this high is what we call the external liquidity. Now that external liquidity resting above that external high serves as the major inducement. The reason is why I skipped this is because it says below the external low, depending if the market is bearish or bullish. Of course, it will be an external high in this case since the market is bearish, and it will be an external low if the market is, of course, bullish. So since this case is actually a bearish one, so this external liquidity resting above this external high is what serves as now the major inducement. And this is only the case where the trading range has a minor inducement. And in this case, we can clearly see that our trading range has a minor inducement. And what is a minor inducement? It's actually the liquidity resting above the high, of the recently formed or the most recently formed valid pullback that gets created or is formed before the break of structure, in this case a bearish break of structure. Okay, so let me get rid of all of this messy part so that now we can be left with a naked chart exactly right here. And also I get rid of all of this so that we can just remain with a clean chart for a cleaner explanation. Okay, so exactly right here you can clearly see our chart very clearly, and we have our minor inducement exactly right there and our major inducement at that high. So let me mark that exactly right there. And so let me mark them as this. So that's the minor inducement. And of course, the external liquidity becomes the major inducement or serves as the major inducement. Okay, so let me continue running price. And yeah, we can clearly see exactly right there, price is heading higher. And exactly right there we can clearly see that price created another valid pullback. So now this is very important, guys. We all know that once price creates another valid pullback, we usually shift focus to the most recently one, and we can clearly see that price created another valid pullback below here. So this means that we shift focus to it exactly right there. So this means that this one here is no longer the major inducement but just a random external liquidity, since we can clearly see exactly right here that price created another valid pullback, and this valid pullback price created was of course after the break of structure. So this means that the liquidity resting above the high of the most recently formed valid pullback that price created after the break of structure is what will be called as the major inducement. And since it is a major inducement, this means that this one here is just a normal external liquidity. This one here is no longer an inducement, so don't go on marking that one as the minor inducement. No, it's no longer the inducement. We only focus with the most recently formed valid pullback. Okay, so right now we all know that after price has taken out the inducement, it's now when you mark your POIs, and of course know where price will be reversing all the way towards that is a break past this external low. Okay, so exactly right here we can clearly see that price has already taken out the major inducement, and right now if I am to mark the POIs, you can clearly see the decisional, of course exactly where price is currently, and of course the extreme, it's none other than this one here. So price will be reversing from any of these or the takeout of this core liquidity level exactly right there. Don't worry about these POIs and the core liquidity levels. We'll be talking about all of this on the next episodes of the series. But in today's episode, it's just about inducement. Okay, anyway, so let me continue running price. And we can clearly see exactly right here, price has mitigated that extreme order block. And yeah, I am anticipating a reversal from there. Okay, and you can clearly see exactly right there, that's where exactly price reversed from that extreme order block, and we can clearly see that this one here becomes a break of structure. So that becomes a bearish break of structure exactly right there, and we have just created a new swing point high exactly right there. So this means that this one here is no longer our external liquidity, but rather this here it is. Okay, so now here's something interesting. We can clearly see that in this trading range, there is no any valid pullback. And the only valid pullback that I'm seeing here is our external high. So in this case, since this trading range does not have any valid pullback, our most recent formed valid pullback high, then it is our external high. And so this one here becomes our major inducement. And if there's something I want you guys to take out from this video, you should never buy or sell without inducement. Okay, so let me explain that. We can clearly see exactly right here that this one here is our extreme order flow on that dealing range. And yeah, most of the sellers, they will be looking forward to sell from this low. So probably they'll be setting their limit order, their sell limit order exactly right there. And of course, they'll be targeting the external low below there, probably extend it for 1:2, and they'll be happy knowing that they're just waiting for an A plus setup, only for price to just do that. And you can clearly see exactly right here, price even gave them a reversal confirmation. That is a very strong reversal pattern. And for those who usually wait for a reversal confirmation, of course, their sell will be after this bearish candle, this large bearish candle, stop loss above there, and of course they'll be still targeting this external low or some few pips below there for the greedy ones. Okay, so if I am to continue running price, you can clearly see exactly right there. The first one gets stopped out, and the one who had a sell limit order also, as you can clearly see, they are all taken out. And you can clearly see price has yet achieved to their target profit exactly right there. So this is the reason as to why I'm saying, guys, you should never sell without the inducement. You should never buy without the inducement. And that's the reason as to why inducement plays a very crucial part in marking structure or in market structure mapping. And you can clearly see exactly right there, that's our major inducement, and price has taken out that major inducement. So right now here is just you to wait for a reversal confirmation, probably a strong reversal pattern from here, and now you'll take that sell knowing that price has taken out the major inducement, and you'll be safe in that case. So exactly right there, you can clearly see that strong bearish candle from here. So that would have been your entry. Stop loss, of course, some few pips above that high, and of course you'll be targeting the external low. So you can clearly see the trader who knows that you can never sell or buy without the inducement. In this case, he would have waited, and you can clearly see exactly right there, after price has taken out the inducement, you can clearly see the clear confirmation. And if I am to run this trade, you can clearly see that this trader, you can clearly see exactly right there, reaped his good profit exactly right there. So guys, that's what I wanted to share today, just a small part. I just wanted to share about inducement. The reason is to why on the previous part we were using the recently formed valid pullback. Yeah, you can clearly see the reason now. It is because of the inducement. The recently formed valid pullback, there is a liquidity resting above that recently formed valid pullback, and that liquidity resting above that high in a bearish scenario is what we call the inducement. So depending with if it is created before the break of structure or after the break of structure, yeah, you just know which is the major inducement and which is the minor inducement, just like we discussed earlier. And we know that without the inducement, we cannot confirm a break of structure. That's very important, guys. Without the inducement, we cannot confirm a break of structure. And you can clearly see all of these break of structures, we are confirmed after the inducement is taken out. So this one here is our recent, you can clearly see the swing points. So yeah, that is the swing point. So some other trader will say that this one here is a change of character. I mean exactly right there, but this one here is not a change of character, but rather a major inducement sweep. So guys, yeah, that is all about inducement. And also guys, in marking of inducement, we only consider the correct, we only consider the impulsive leg. So this means that no matter what price does on the corrective leg, as you can clearly see exactly right here, this here was a 2-leg. You can clearly see that this here was a 2-leg. And yeah, I never cared about any of price, like whatever price did there. I only cared about this impulsive leg, this impulsive leg. This is the very important part in our marking of these, even on POIs, even on marking POIs, we usually consider this impulsive leg. Also, you can clearly see in this case, this corrective leg is made up of many pullbacks, but we don't care about what the corrective leg is formed. Even if it's only made up of 3 bullish candles, like it doesn't matter what the corrective leg does. We are only interested with this impulsive leg, like this impulsive leg or this, the impulsive leg. We're only interested in that. So yeah, exactly right there, that's the high. You can clearly see price did that. Same to this here, we can clearly see that this corrective leg is made up of, you can clearly see. So I'm not interested in that. Whatever the corrective leg does, even if it was created by a one big bullish candle, it doesn't matter. We are only interested with this impulsive leg. So guys, that's it for today. It was just a small video, but very important about inducement. And now on the next part, we'll be talking about order flows, then order blocks, and then now POI identification. Then you'll get to know exactly as to why I am using these ones here as the POIs, how I am able to identify this one here as the point where price will be reversing, how I am able to get these sell setups. And now from there, get to discuss about the entry modules. and eventually you'll get to understand True SMC like a pro, backtest, get to trust it, and of course, eventually getting to enter the trades of your own.